Hello, I'm Sheryl McCarthy of the City University of New York. Welcome to One to One. Each week, we address issues of timely and timeless concern with newsmakers and the journalists who report on them. Artists, scientists, educators, social scientists, government leaders, politicians, each are one-to-one. Today, we're delighted to welcome Dr. June O'Neill. Wollman Distinguished Professor of Economics is among her many titles at the Zicklin School of Business at the CUNY Baruch campus. She's been both an insider and an observer of federal economic policy and action. And at this time of economic uncertainty, we look to her for an assessment of where we're headed and if it's in the right direction. Welcome.
Very happy to be here.
You have had a very diversified career. Director of the Congressional Budget Office, Director of the Office of Policy and Research at the U.S. Commission on Civil Rights, Senior Economist on the staff of the President's Council of Economic Advisors with the Urban Institute. So you've dealt with probably all of the major economic issues of the recent decades, including welfare reform, where I'd like to start. Very much vilified at the time.
Yes.
But according to you, it's been a big success.
I believe it has been a success. I mean, much more successful than the proponents of the policy at the time, ever dreamed. And it was one of those issues that where the Congress and the president, who was Clinton at the time, both agreed that this was the way to go. The exact policy approach differed between the two, but that got worked out. But the basic thing was that the idea was to, well, as Clinton said, was to end welfare as we know it. And the idea was to encourage people to become much more self-sufficient. And to end, by ending welfare meant ending a situation where people go on welfare, become comfortable on welfare and afraid to do anything else and just stay there for many, many years and raise children who will never have observed a working parent because most of the adults on welfare were single parents.
So it introduced this mandatory work requirement.
Yeah, it had two components. One was a 5-year time limit on the number of years you could be on welfare. And the other one was the work requirement. The work requirement came first, and confronted with the idea that this was a federal law, that you really had to start looking for work. Many women, who had not a great deal of work experience, and maybe not a lot of education, went out and did work. And it was an amazing increase in the labor force participation of single mothers, who was the largest group on welfare.
So it's credited with reducing the number of people on welfare by half or more than half.
Oh yeah, and in a place like New York, where it was believed to be impossible because many reforms had been tried, but there were always the kind of reform that said, we will give you training, try and give carrots, but no sticks, and it really didn't work.
So there are a lot fewer people on welfare, but are people less poor?
Overall, single mothers are less poor. The poverty rate of children who are in families, in a study that I did with Sanders Kornman at Baruch College, another professor at Baruch, we looked at the changes in poverty among groups who are likely to have been affected by the change in by the welfare reform, namely single mothers with little education. And children growing up in such families, the poverty rate significantly dropped. It went up a little bit during the recession of 2001-2. But it then but it stabilized and then came down a bit. But even at the height of that recession, it was much lower than it had been before. So there was a gain. Also, it looked as though the women themselves were getting training. They were, in addition to what had been offered as help along the way, because most places, New York included, offered training programs and education support, child care support. when somebody came to the welfare office, they were told, that this program was really about, working, and they were going to assist you in going down that path.
So you've seen more of these former welfare mothers who are now working. Did it change behaviors in other ways? For instance, one of the targets of it was the teen pregnancy rate, and another was, that young people were not getting married. Have those numbers changed as a result?
Well, teen pregnancy has declined phenomenally, and particularly among African American teenagers. Whether all of that can be attributed to welfare reform, I don't know, because it had begun to decline a little bit before. But the fact that it continued, I think it was propelled along by welfare reform.
Now, I think I saw some statistics, some figure that said the actual marriage rate of the women in this sort of cohort has declined. Is that correct? Or
marriage rates did not go up. On the other hand, there was not a continuation of the erosion. The percentage of children with two parents had been declining. That sort of stopped. In the Hispanic population, there was a little increase in marriage, but there are other policies that I think make it practical not to marry, unfortunately. One of the helps is the earned income tax credit, which offers a significant increase in what your income is.
And that's for working parents.
For a working parent. And there's no minimum work. But a working parent who has two kids gets a supplement to their income of, it was $4,500. I think it's gone up a bit since I last looked. But that's a big increase in your income if you're a low-wage earner. However, if you're married to somebody, your income might very well not qualify because it is income tested. So if you're married to somebody who's earning $20,000 a year, probably you will get little or nothing.
Right.
However, if one of the members, either the wife or the husband, claims the two kids, they're not married, but if the partners claims the two kids, then of course they can get the extra 45, and that's a big encouragement to get married.
Right.
And I don't think people have looked at that enough. Everybody presumes that something like that is probably happening. But I think that's something that should be looked into because it.
So what are your main areas of concern and study right now?
Well, I've been working on healthcare, actually, comparing healthcare in the United States and Canada, because many people have pointed to Canada as a model that we should follow. Canada has a single-payer system. It's largely publicly funded. Not everything is included, but all the basic health care is included, and it's free of charge. Those who support it point to to data on infant mortality and life expectancy. Canada has lower infant mortality, higher life expectancy, and said they have this simpler, cheaper system that's more equitable, and they have better outcomes. So I, together with my husband, Dave O'Neill, we did a study comparing Canada and the United States, starting with looking into the infant mortality and the life expectancy differential. And we learned a lot of things about the United States as well as about Canada. All is not that great in Canada. I should preface it. The Canadians, when something is free, there's nothing to restrain people from going. In terms of, there are no financial restraints. However, in order to try and hold back expenditures, of course, what has to be done is some form of rationing. Canada has a provincial system. It's a much smaller country than the United States, 10% of this, in terms of population. So the job of running healthcare is not as great as it would be, and it's not the population is not as heterogeneous as the United States. But at any rate, so what they did was put caps on the amounts that hospitals can spend, the different provinces. They do somewhat different things. Caps on what doctors can earn over the year. And as a result, they don't take patients, and there are long waits. Well, the waits became so long and such an issue in Canada that in one of the provinces, Quebec, a doctor sued, saying that one of his patients, I don't know whether the patient died or almost died because of the wait to see a doctor. The waits had become so long. And he said the reason was, not only is it a publicly funded system, but there's a ban on private. You cannot have private insurance. You cannot have private clinics who would take people, who weren't covered by the Canadian system. So if those who didn't have money to come across the border to the United States would just simply wait, and in some cases become quite ill. So it went to the Canadian Supreme Court, which said that the banning of private insurance was unconstitutional. So the Canadian system is now in flux, where there is a demand for more privatization, to have a so-called two-tier system like many of the European countries do. Have against side by side. In England, there is the national health care, but on the side, you can buy private insurance. The same is true in Germany, France. They are all two-tier systems.
And some of the presidential candidates are talking about something similar, a combination of public and private, specifically regarding health insurance to cover.
Yeah.
That's how you cover everyone?
Well, sort of. We do too. We have, Medicare's public, Medicaid is public. There are other federal programs that cover the people who are uninsured get some care through other kinds of public programs, but it's not. And then, the rest of us have various kinds of private insurance, but which is not totally privately funding. The federal government pays quite a lot in the employer-based, which is the basic health insurance in the United States, is funded in part by the federal government because through the tax deduction. In fact, that's what's always held it up all these years, is that the firm gets a deduction for the premiums that they pay, and they may pay all of it and take the deduction, or if the employee would get some deduction, I think. But basically, it goes through the employer, and it's quite inequitable because the larger the policy, the bigger the deduction, and that's a significant chunk of your total compensation nowadays. And actually, Bush had proposed allowing individuals to get a similar deduction. And many of the proposals really work on that theme.
Right.
You noticed all of the candidates have something, either would be a voucher or a refundable, you could call it a refundable tax credit.
So it's really the companies that have opposed the reform?
No, they haven't. I think they, at this point, would probably welcome it, because it's become such a burden, and it does affect the amount that you can pay your employees in salary. If you're paying them, a big chunk of your total compensation goes for health premiums. The other thing is that when individuals are not making the purchases, it's not the individual's choice. People don't have much of a choice. It's what the employer picks, and you might pick something else. If you were given sort of an amount, and with the voucher, and if it was inversely related to income, which a lot of people think it should be. So instead of the richer you are, the bigger the subsidy, the poorer you are, the bigger the subsidy. And then how exactly it would work remains to be determined. Whether, states would sort of supervise the kinds of policies that would be offered. There would be some kind of board, that would sort of screen the financial credibility of the various health insurance companies. But if every if every insurer would offer sort of a basic policy, but some would have more frills than others, you would make your own choice.
Right.
Like some people would prefer to have more catastrophic insurance. They'd rather pay for especially people who are young and believe they're going to be healthy and who make up now a lot of the uninsured. They would probably go for a package that was less costly,
Right.
but it didn't start until, say, $1,500 of
Right.
medical expenditures.
Right. We're going to take a short break, and we'll be back with Dr. June O'Neill, Director of the Center for the Study of Business and Government at Baruch's Zicklin School of Business.
Oh, I must be careful. Oh, that's a nice picture.
Come on, Anna.
Okay.
Foreclosure doesn't affect just you. It affects your whole family, too. If you've fallen behind on your mortgage, we can help. Call 1-888-995-HOPE, because nothing is worse than doing nothing.
Welcome back to One to One. I'm Sheryl McCarthy of the City University of New York with Dr. June O'Neill of Baruch's Zicklin School of Business. The economy in general, if you look at the relentless stream of corporate downsizings, the mortgage crisis, the tanking stock market, higher prices, the weakness of the dollar abroad, the high price of gasoline, and the large number of people without health insurance, it seems to me that America's sense of well-being has eroded somewhat, and we seem to be headed for hard times. Is that the case in your view?
Oh, I think that we're going through a temporary period of hard times, and one that came upon us, fairly suddenly, because if you go back a few months, things were looking really good. The stock market was at the highest level it ever was in October. Unemployment rate has been quite low, very low, certainly compared to other countries, and compared to where we were historically, it's a low period of unemployment, and inflation was quiet. The only thing, there were some warning signs. I mean, if you see housing prices were going up very rapidly, and which was starting to look like a bubble, and it was. And then that came crashing down, when we found out that a lot of people were holding mortgages that were subprime mortgages, meaning loans. Banks had made loans based on the assumption that prices would go up on properties that really did not hold their value, and prices of which went down. And so, and credit was extended, sometimes when it was the belief that that the buyer really couldn't afford it if things didn't change, but on the presumption that they would have so much equity in the house because of the rising prices that it would be affordable. So, but that turned out not to be the case, and the collapse of housing sort of set in motion a kind of a vicious circle of events, because that set the dollar going down. And it shook the psychology is very important, but all of this is happening in the space, the final realization that the housing problem and the deep financial crisis that many of the banks were in, because they'd been trading like mad mortgages, holding assets that weren't worth anything.
So it's largely the subprime.
The subprime was the focus of the, sort of. Nothing that much happened to prime jumbo loans. Those were, there was a slight uptick in, foreclosures, but nothing like the subprime.
So how do we get out of it? And what do you think of the president's tax rebate?
Well, the fear is that, this would cause, certainly it affects construction, but construction was also affected by having a really terrible winter. It affected the price of oil. Then we got the slide in the dollar. We import most of our oil, so the cost of oil went up sharply, and there had been other reasons why it had been rising somewhat, but the final, over the past month, the escalation in the price of oil, sort of followed the decline in the dollar.
Are there things, policy?
What can we do?
Yeah.
I think, the president's idea, and or many people shared this view, that it would be not knowing who exactly is, that there would be some generally shared pain, if for nothing else, because of the higher price of oil, to, provide some kind of subsidies. And the subsidies, are expensive. And they do, they'll give the economy a little boost. They're also less harmful than any kind of intrusion we could do in the mortgage market. I was somewhat surprised that Mr. Bernanke had recommended that banks should forgive some loans, or I don't know exactly what he meant, because I didn't read it, and it's possible that the accounts that I read took a sentence out of context. But
would that be bad?
I think that would be a very bad idea, because it sort of guarantees that it'll happen again. The dot-com, this was a similar kind of event, another bubble, the dot-com problem that sort of culminated in the 2000, 2001, when prices were out of control. People were buying stocks that had very little value, and the bubble burst. But you wouldn't want to then give people money who suffered a decline. Because you want to really give a message that people should,
not get
banks
slap-happy.
should not go after people who obviously are going to have a problem and a property that really doesn't have the value there. So you really want to instill caution as a lesson, not say, we will bail you out. And it would be sort of hard to know where to begin. The banks are in bad shape, so
right.
Putting on them another burden to would, I think, not be very well advised.
So if you had to come up with a 3-point or 5-point economic plan for going forward, what might some of its components be?
Well, I think one of them would be some sort of tightening of regulations, probably on loans. That's for the future. For the time being, we have a very resilient economy. We have survived similar kinds of things. We survived the dot-com shock. The market came back, with force after a few years. The same thing in 1990. We had a savings and loan crisis. Somewhat similar, where banks had extended themselves. It was banks speculating. That was a very serious problem. And that led to some tightening of regulations. Again, nobody was watching while all of this was going on. The various groups that are supposed to be looking over the housing market really weren't, I don't think, doing their job. So but that's all for the future. We need more groups that are looking.
I went to see my financial advisor yesterday, and he said that all of his clients, including me, were depressed. So I guess the message is we shouldn't go out onto the ledge quite yet.
Yeah, no, I think that all of the forecasts show that there will be a slowdown in 2008 and then a rebound. And, looking at the budget, people say the budget is terrible, but they haven't really looked at the budget deficit. The budget deficit in 2007 was 1.2% of GDP. That's, I think, like the 8th smallest budget in the past 40 years or so. The budget deficit had gotten quite small because the economy was doing well. Revenues were growing, and we were doing quite well. Also, the dollar does have a silver lining, namely the export industries are doing extraordinarily well. States that have a lot of export industries are doing well. But I think right now it's the nerves, seeing the price of it's something that you buy every day, and some people are really dependent on oil, gas and oil. And as I said, the winter didn't help.
Or is dependent on Starbucks coffee, and they're both going up.
Right. But it's not the oil price. The underlying situation is not that there's a shortage of oil, actually. And if you might have noticed, OPEC was thinking about cutting production. They were worried that there was, fairly good supplies around. It was going to pull down the price. But speculators are keeping it up, you know, seeing the price going up.
Right, right.
They think it's going to go up more. But once we get past that, I think the price of oil will stabilize. But the banking thing is going to work itself out, you know. But, you know, there'll be some companies that will take, you know, big losses. Citigroup, you know, there's no doubt, you know, it's going to have a huge loss. But capital is fluid, and, you know, we don't know. No one really knows. I think any idea would probably mess things up and make it worse. But I can tell you, in terms of the forecast, the professional forecasters, the Congressional Budget Office as well is sort of in line with the so-called blue chips. That's about the 50, you know, largest and, you know, most significant firms that do forecasting. They all forecasting about the same thing: a slowdown in GDP in 2008,
and
but not a recession, and a rebound. And
well, I
deficit
feel
goes
better.
up next year, but then it comes down again.
Okay. I'm sorry, but we're out of time. My thanks to Dr. June O'Neill for joining me, and for the City University of New York and 1-to-1, I'm Sheryl McCarthy.